Friends, global liquidity is growing. BlackRock is actively accumulating bitcoins. The Fed will meet for the next meeting in 9 days. And all this is happening against the backdrop of a large-scale change in investor sentiment. Even for altcoins, which are now in a deplorable state, there are signals for a possible return to growth. Subscribe to the channel and let's figure it out. In the last video, we analyzed the worst-case scenario, because it is for such situations that you need to prepare first of all. But I learned your opinion from the comments that everyone is very much in tune for this spring and summer. Therefore, let's look at the market situation. What arguments are there in favor of new growth? And what key indicators are worth paying attention to? Despite the fact that Bitcoin has tried to move more for gold in the last 2 weeks than for the US stock market, it has definitely not been enough time for a new trend to appear, and the correlation with the S&P 500 will soon be restored. If you look at stocks, we have an interesting picture of recovery in capital inflows, sentiment, and directly on the chart. Treasury funds received a record inflow of $19 billion in just a week, which broke the record of $14 billion set during the Crown crisis in 2020 year. A good signal that indicates the return of confidence in the US national debt, which will simplify the life of the Trump administration. And they will be able to refrain from further tough decisions in the economy. And if you look at American funds that invest in stocks, since the beginning of the year, they have received a record $156 billion, breaking the previous record of 2021 year. This cannot be verified right now, but a significant part of these funds could have arrived in the last week, after Trump changed his shoes on the Fed and China, which led to a change in investor sentiment. This theory is indirectly confirmed by the assessment of the difference between bullish and bearish sentiments, which reached the same level as before the stock market reversal after the bottom in 2022 year. Now let's look at the graph of the S&P 500. Thanks to Trump's efforts, the stock index fell below the 50-week moving average, but has been actively recovering since the beginning of April. Pay attention to the blue line. The level of 5,700 points will be a key resistance and an indicator of further movement. In the 20th year, after the index returned above this line, we got a full-fledged bull market in stocks and cryptocurrencies. But in the 22nd year, we had a false breakdown, after which the market became bearish, and then stocks fell by 27% from the peak, and Bitcoin folded by 77%. Of course, we all want to have a scenario of 2020 year, but then such a global reversal of the markets was provided by the policy of the Fed. The regulator reset the rate and launched quantitative easing, that is, turned on the printing press. The next Fed rate meeting will be held on the 7th of May, and with a probability of 91%, the rate will remain unchanged. We are not talking about launching quantitative easing at all. Donald Trump is constantly putting pressure on the Fed to cut the rate for a reason. In his understanding, this is the very tool that will keep the stock market and reduce the yield on the US government debt. However, Ramaphosa and the company have their own vision of the situation. Their priority now is the fight against inflation, which may rise sharply due to Trump's new tariffs. Last week, Trump abandoned harsh rhetoric against the Fed and no longer demands Powell's resignation. Perhaps now Powell will also soften his rhetoric, and during the traditional press conference after the Fed meeting, will not frighten investors with rising inflation, and declare that he does not intend to intervene and save the financial markets. And even better, to give everyone a positive charge if Powell talks about plans to lower the rate at the next meeting in June. And the 13th of May will also be an important day, because US inflation data for April will be published, and it will be possible to say for sure whether Trump's tariffs affect price growth, which will allow a better understanding of the Fed's next actions. And if we are considering a positive scenario for the markets in this video, then it is logical that inflation should not accelerate sharply, and even better, that it continues to decline. Now you know which debts and indicators to follow in order to understand whether the financial markets will continue to recover. And we can move directly to Bitcoin and alt Bitcoins. But before that, I will ask you to click on the like button and subscribe to the channel. Investors are mainly determined to accumulate an asset. There is also an increase in the number of wallets whose balance exceeds 1,000 Bitcoins. That is, whales also turn on the mode. And the institutionals have picked up this trend. Last week, the USTIF spot Bitcoins attracted almost $3 billion. Most of these funds settled on the balance of the fund from BlackRock. They replenished the balance for 9 days in a row, and as can be seen on this chart, the activity of purchases has increased significantly in the last week and is comparable to the indicators of mid-January. So, on April 23rd, the balance of Bitcoins on the BlackRock fund was replenished immediately by $643 million. On Saturday, in my Telegram channel, I disassembled 4 Bitcoin and kind indicators on the subject of whether we have already passed the peak of the cycle or not. Pew Small, which evaluates the profitability of miners, is in the middle of the range and has not yet given a signal for the peak of the cycle. FO displays the difference between the realized value of short-term and long-term investors. It also has not yet given a signal about the passage of the peak, but at the same time, in January of this year, it reached the same values as at the peak of the 21st year. So here the situation is controversial. Frisk's Reser shows hodler's confidence level in Bitcoin. According to this indicator, current prices are great for shopping. The 4th indicator indicates a classic correction situation, so we will not dwell on it. Let's take a better look at the price forecast according to the cycle top metric. This is an increase to $155,000, provided that Bitcoin does not fail support at the level of $91,400. Of course, I also know about the story with the correlation between the graph of the money supply of M2 and Bitcoin. When the first cryptocurrency is delayed for M2 by about 70 days, and now we should have a very steep growth. The amount of liquidity directly affects the market situation, and while the Fed holds the rate, Europe and China are easing monetary policy. But if you already believe in this story right now, then do your homework, plot M2 for the entire existence of Bitcoin, and not just for the last year and a half, on which you found a correlation. You will be able to draw unexpected and interesting conclusions. I want to show you another chart where there is Bitcoin and its 50-week moving average. During the correlation, Bitcoin did not fall below this line, which gives a chance for a situation with a repeat of the history of 2021 year, when we had another peak after a strong correction. The next trigger for this scenario will be the successful consolidation of Bitcoin above $95,000, although it does not necessarily work out on the first attempt. As for alt Bitcoins, traders have also received a charge of optimism here and are already drawing these charts based on Total 3. This is the capitalization of Bitcoins without Ethereum. According to this forecast, Total 3 may almost double, therefore. Alt Bitcoins will significantly overtake Bitcoin in terms of growth. I can't call myself that optimistic, so I look at how Total 3 successfully came out of the wedge, and see a good chance of trying to storm the resistance in the range of $900 billion to $1 trillion. Given the absence of strong trends in the altcoin segment at the moment, even such a result will be very good, and at the same time quite profitable. And then I will be guided by the situation. But this is my point of view, and by